All right, let's talk about January 26th. If you just glanced at the Colombo Stock Exchange, you'd think it was completely dead. I mean, the main index barely moved an inch. But trust me, if you think nothing happened, you missed the entire story. We're going to dig in.
So, here's the number that fooled pretty much everyone. The All-Share Price Index, the ASPI, was down just 0.1%. That is, basically a flat line. You'd see that in a news headline and you'd be forgiven for thinking, well, that was a totally forgettable day. Moving on.
But hold on a second. Not so fast. A boring day? No way. If you walked away thinking that, you totally missed what was really going on. Because under that super calm surface, the market was an absolute hive of activity. It was like a battle was playing out between two very, very different kinds of investors.
Exactly. While the main index looked like it was asleep at the wheel, there was this massive disconnect between what local investors were doing and what the big foreign funds were doing. You know, what people often call the smart money. So let's follow them for a minute and see what they were really up to.
And this slide right here shows you exactly what was happening. Check it out. While a lot of locals were selling, foreign investors were net buyers. They poured in over 165 million rupees and only sold about 140 million. So you do the math, that's a net inflow of over 35 million rupees. Clearly, they saw something they really, really liked.
Yeah, and they weren't just buying random stuff. The money was flowing into some very specific targets. We're talking about the big boys, the blue-chip heavyweight companies like LOLC Holdings and Cargills. You know, these aren't small speculative bets. The smart money was clearly on the hunt for quality.
And they were buying with some serious conviction. The stocks that foreigners were piling into, they were also the most actively traded stocks of the day. LOLC had the single highest turnover in the entire market. Cargills was right up there in the top 10. This tells you that huge blocks of shares were changing hands, with foreign funds on one side just buying up what the locals were selling off.
You know, this kind of targeted buying by the big institutional players, it often signals that maybe an entire sector is undervalued. So, it got us thinking. Are some of Sri Lanka's biggest banking stocks actually on sale right now? So to figure that out, we're going to use a really simple tool called the price to earnings, or PE ratio. Just think of it like a price tag for a stock. It just tells you how expensive it is compared to the profit it's actually making. A lower PE often means you might be looking at a pretty good bargain.
And this is where it gets really compelling. Okay, so the average PE for the entire market is sitting around 11.4. Now look at Commercial Bank and National Bank. We're talking two giants of the industry. Their PE ratios are just 5.2 and 4.6. That is less than half the market average. I mean, on paper, they look incredibly cheap, and they even pay out a better dividend.
Which, of course, brings us to the most obvious question, right? If these huge, stable banks are trading at such a massive discount, why isn't everybody buying them? What are we missing here? It's a real puzzle. Because while the smart money was carefully hunting for these bargains, a totally different game was being played at the other end of the market. And we can really only describe it as, well, speculative madness.
Okay, so to understand this, you need to know about something called price bands. Basically, to prevent complete chaos, some of the smaller, more volatile stocks aren't allowed to move more than a certain amount in a single day. And for a lot of them, that limit is 25%.
And on this supposedly flat day, several stocks shot up so fast they slammed right into that 25% ceiling. We're talking industrial asphalts, radiant gems, Harrishendra Mills. These stocks just went vertical. This is the absolute casino corner of the market, folks.
So let's just be crystal clear about this. This is not the same thing the foreign funds were doing. Buying a stable bank at half the market's valuation, that's investing. Chasing a tiny stock that's already up 25%, just hoping it does the same thing tomorrow, that is pure speculation. It's gambling.
So when you put it all together, what you have is this fascinating picture, a market that looks completely dead from a distance, but when you zoom in, you see this massive tug of war happening between two completely opposing philosophies. And this chart proves it. The total turnover for the day was over 5 billion rupees. That money was not just sitting still. You can see huge amounts of activity in sectors like capital goods, diversified financials, which is where LLC sits, and food and beverage. Money was definitely moving around.
So the key takeaway here is pretty simple. The headline number, that tiny minus 0.1%, it was the most misleading piece of information you could have looked at all day.
The real action, both the smart opportunities and the crazy risks, it was all happening just beneath the surface. You just had to know where to look.
Which really just leaves us with one final question. On one side, you have the smart money carefully buying up quality at a discount. On the other side, you have speculators chasing lottery tickets. So when the market opens, where will you be looking?